Want to be debt-free sooner than you thought possible? It's not a pipe dream, but a reality waiting to unfold. Imagine waking up one morning to the realization that the weight of your mortgage, that behemoth of a burden, has been lifted. A dream, you say? No, it's a possibility that is within your grasp, if you understand the concept of mortgage payoff acceleration. Now you might be wondering, what's this all about? Well, mortgage payoff acceleration is simply a strategy to pay off your mortgage faster than the standard 30-year term most homeowners are familiar with. It's about making extra payments, or larger payments, towards your principal balance, which can dramatically decrease the overall time it takes to pay off your mortgage. Think about it. Every dollar you pay above your required monthly mortgage payment goes directly to reducing the principal of your loan. This not only shortens the lifespan of your mortgage, but also reduces the total amount of interest you pay over the life of the loan. Being debt-free means reclaiming your income, your financial freedom. It's about having the ability to make choices without the constant worry of a looming mortgage payment. It's the freedom to invest, to save, to spend on your terms. It's about having the peace of mind that comes with knowing that your home, your sanctuary, is entirely yours. The benefits of paying off a mortgage early are numerous. Besides the obvious financial savings, there's the emotional satisfaction of owning your home outright. No more monthly payments, no more interest accumulation, just the simple pleasure of knowing that your home is truly yours. That's a feeling of accomplishment, of security that's hard to put a price on. So, are you ready to unlock the secret to becoming debt-free? Let's dive in. Scene script. Before you start sprinting, you need to know the length of the track. The same goes for your mortgage. So, what's a mortgage? Simply put, it's a loan taken out to buy property or land. But it's not just a simple loan, it's a complex financial instrument with several components. And understanding these components is crucial if you're planning on paying off your mortgage early. Let's start with the principal. This is the amount of money you borrowed to buy your home. It's the backbone of your mortgage, the main thing you're aiming to pay off. Every month, a portion of your mortgage payment goes towards reducing this principal. Next up is interest. This is essentially the fee you're paying the lender for the privilege of borrowing their money. It's calculated as a percentage of your outstanding principal and is highest at the start of your mortgage term. Speaking of terms, let's talk about the term of your mortgage. This is the length of time you have to pay off your mortgage in full. It can be as short as 5 years or as long as 30 years. The longer the term, the more interest you'll end up paying. Finally, we have the payments. These are the regular amounts you pay to your lender. Payments are typically made monthly and are a combination of principal and interest. Over time, the portion of your payment that goes towards the principal increases, while the portion that goes towards interest decreases. So why is understanding all of this important? Because it's the key to planning your mortgage payoff. For instance, knowing how your payments are split between principal and interest can help you decide whether to make extra payments towards your principal. Understanding the term of your mortgage can help you figure out if refinancing to a shorter term might be beneficial. Knowing your mortgage inside out is the first stride towards becoming debt-free. And remember, the race to becoming debt-free isn't a sprint, it's a marathon. Keep your pace steady. Stay focused on the finish line, and you'll get there sooner than you think. Now that we've got the basics down, let's get into the meat of the matter. Strategies for mortgage payoff acceleration. First off, consider making bi-weekly payments. It's a simple trick of the calendar. When you pay half of your monthly mortgage every 2 weeks, you end up making one extra monthly payment each year. That's because there are 52 weeks in a year, which equates to 26 bi-weekly payments or 13 monthly payments. This can shave several years off your mortgage term and save you a significant amount in interest. Next, let's talk about refinancing to a shorter term. If you have a 30-year mortgage, you might want to consider refinancing to a 15 or 20-year term. You'll likely have a higher monthly payment, but you'll pay off your mortgage faster and save a bundle in interest over the life of the loan. Plus, shorter-term loans often come with lower interest rates, which is a double win. Now, on to making extra payments towards the principal. Any additional money you can put towards your mortgage principal will help you pay off your loan faster. This could be an extra $50 a month or a few $100s a year. Every bit helps. The key here is to specify that these payments are for the principal, not the interest. Otherwise, your lender may just apply them to your next monthly payment. Lastly, Consider dedicating windfalls to mortgage payments. Got a bonus at work? Inherited some money? Received a sizable tax refund? Rather than splurging on a new gadget or a vacation, consider using that windfall to make a significant dent in your mortgage. Every substantial payment you can make towards your mortgage principal will help you pay off your loan faster. Remember, all these strategies are tools in your toolbox. You can use them individually or combine them in a way that makes sense for you. However, it's essential to consider your overall financial picture. For example, if you have high-interest credit card debt, it might make more sense to pay that off first. Or if you don't have an emergency fund, you might want to build that up before making extra mortgage payments. Also, keep in mind that while paying off your mortgage faster can free up cash flow and provide peace of mind, it's not always the best financial move. If your mortgage has a low interest rate, you might be better off investing any extra money you have to potentially earn a higher return. Remember, the strategy that works best for you depends on your financial situation and goals. While the road to being debt-free is enticing, it's not without its bumps. But don't worry, we've got you covered. Firstly, let's talk about the potential for financial strain from aggressive payoff plans. Yes, it can be tempting to funnel every spare penny into your mortgage to clear it as fast as possible. But remember, life is unpredictable. If you're putting every dime into your home and neglecting to save for a rainy day, you might find yourself in a pickle if an unexpected expense comes along. So how can you avoid this? Balance is key. Make sure you're maintaining a healthy emergency fund while accelerating your mortgage payoff. Next up, the paradox of penalties for prepayment. Yep, you heard it right. Some lenders actually charge you for paying off your mortgage early. This can be a bitter pill to swallow when you've been working so diligently to be debt-free ahead of schedule. The solution? Check your mortgage agreement for any prepayment penalties, and if they're there, factor them into your payoff plan. If you're still in the process of securing a mortgage, try to negotiate for a contract without these penalties. Finally, let's delve into the potential opportunity costs. Paying off your mortgage early means you're tying up a significant portion of your income in your home. This could limit your ability to invest elsewhere and potentially earn a higher return. To avoid this pitfall, consider your overall financial goals. If your mortgage interest rate is lower than the return you could get from investing, it might make sense to invest some of your income instead of rushing to pay off your mortgage. Being aware of these potential pitfalls can help you navigate your mortgage payoff journey smoothly. So, go forth and conquer your mortgage with confidence and savvy financial planning. Remember, the goal is to be debt-free, not to speed through without considering the potential bumps along the way. So, we've covered quite a bit of ground today. Let's quickly recap. We started off with the dream of becoming debt-free, an aspiration that's more attainable than you might think. We dove into the nitty-gritty of understanding your mortgage, unpacking the complex terms and conditions that often trip homeowners up. Then we explored strategies for mortgage payoff acceleration. We talked about making extra payments, refinancing your loan, and even the snowball method. Remember, the key is to find a strategy that suits your financial situation and goals. We also discussed potential pitfalls and how to avoid them. From falling into the trap of a too-good-to-be-true refinancing deal to neglecting to consider the potential tax implications, we highlighted the importance of doing your homework and making informed decisions. Remember, becoming debt-free is not a sprint, but a marathon. With the right strategy and mindset, you can cross the finish line ahead of schedule.